For more than 2 decades, we've been educating our listeners about financial topics that are most important to you. Do you have enough money to retire? How will you keep from running out of money? What's your plan for managing market risk? What about taxes, inflation, and healthcare? Each week, we talk with an advisor at Lucia Capital Group about these issues and more. This is Managing Your Financial Future.
Well, thank you very much. Thank me very much for that intro. Well done, John Dean. This is your podcast host, Johnny Dean, Managing Your Financial Future. We are doing so once again here, and a little bit, I don't want to say this is a different episode because it isn't a different episode, but it's something that we don't talk about a whole lot on this program, but I think we probably should. I'm here with you, Professor Rick Plum, Certified Financial Planner, Professional, and Accredited Wealth Management Advisor. Now, I'll tell you where the topic of this, we're going to be talking today about, for lack of a better term, how to be retired. Now, well,
which is pretty good coming from two guys that aren't retired.
Well, yeah, exactly. But what we have seen, well, let's see. You and I were in a meeting with a bunch of other advisors. These are bucketizing advisors from across the country a day or two ago, as we are on a fairly regular basis. And one of the advisors that was on that call, we were talking about retirement spending. And these studies that say that spending tends to, after an interval of years, go down. In other words, somebody who's 88 is unlikely to be spending as much as somebody who is, say, 68. Did I get that correct? That's about right.
It's correct. On an inflation-adjusted basis, too. They're spending a little less in their later years than the early years of retirement. It's not that, and a lot of people will say, well, that's true, but healthcare costs override all of that, and healthcare is going to cost everything. And in the studies that are coming out now, healthcare has been factored in, and in most cases, the healthcare costs that do potentially go up are offset by the reduction in spending in other areas that retirees just naturally go through over time.
Yeah, and so these are normal things, but it's somewhat normal to spend more in retirement because you're generally younger and, early in retirement.
More vibrant.
More vibrant. People in their 60s are generally more vibrant than people in their 80s. But what happens is, because spending goes down, that would mean that spending is higher by default in the early stages of retirement. And there's nothing wrong with that. This is a very common thing. But what was brought up in this meeting that you and I were in by one of the advisors, they said, you know something, I've found over my years that people don't really know how to be retired, meaning that they're somewhat afraid to spend money early on because they're just not used to it.
Well, they're not used to not getting a paycheck. They're not used to relying on their own portfolio, and they're worried that if they rely too much on their own portfolio, that they'll run out of money because they're going to spend their portfolio. And so it is a learning process. It is a change to your financial psyche, if you will. You have to learn to be retired. You have to learn to understand that the money that you've been putting aside every day, every month for the last 40, 50 years is there for a purpose. And that purpose is now. That purpose is to support you in the areas that you want to go and do for retirement.
Well, yes. And you know, part of what you do is there's a psychology element to financial planning. Now, I went around and I checked. There was a site that was devoted somewhat to retirees. And here are some of their comments along the lines of this particular topic. Here are some of the things they said. It's strange not seeing that paycheck hit my account every 2 weeks. That's one. Another one. I thought I'd feel more free, but I'm not sure what I'm free to do.
They have to figure out what their purpose in life is in that case.
Well, that's it. Here's one. Everyone says I've earned this, but I still feel like I shouldn't spend money. There were several of these. One person said, I miss having a purpose or being needed every day. Here's one we deal with all the time with the bucket strategy. What if I outlive my money? That's a big one. And here's one that you just said. Somebody said, I am not used to spending money without earning it back. So these are the questions that people have when they retire. And I think for some of them, what this advisor that brought this up in the meeting said, they were surprised by this because they didn't expect to have to ask these questions. So I want to deal with some of this, Professor Plum. We're going to do less of strategy and numbers. We kind of get into the whole nitty-gritty of the strategy. But part of the strategy also involves keeping people psychologically calm when they retire. And
that's trying to control investor behavior to keep them from screwing up their own portfolios by selling at the wrong time or going all in when the markets are all-time highs, things of that nature. That's an investor behavior aspect that having an appropriate strategy can help a lot with. The other side of it is what we were talking about before, which is the learning to be retired. The fact that you have enough money. I mean, I've seen people that have more than enough money to retire, but all their life they've been savers. All their life they've been living on this, that, and the other thing, and they're very controlled in what they're doing. And now, and money's been coming in, and they still want to save. They're just 40 years plus of being a saver. And then trying to flip the switch and overnight go from being a saver where you get an outside income and you live on part of that and you put part of it away for a rainy day. And then now you're not getting that outside paycheck. You're taking that rainy day fund that you've been building for 40, 50 years and you're living on it. And there is a learning process, a psychological learning process to understanding how this works. And sometimes it takes a while. It takes time to show that check is going to be there every month there. So, and for some people who's used to getting paid twice a month, you can actually set it up to be, take a check every 2 weeks, every couple months, semi-annual, however you want to do it. Most people do it on a monthly basis when retirement, but you can do it every couple of weeks. So you can more mimic that idea of that paycheck.
Yeah.
And they want to see that deposit. And it is like I mentioned earlier, it is a learning process.
Okay.
And for some people, you've got to figure out, now what? So I'm retired. What do I do now? I was with some friends last night. They were retired. Most of them retired. And one of them had just gotten back from vacation. I said, well, that's interesting. You're retired and you went on vacation. And he goes, well, I guess I should say traveling rather than vacation because I'm on permanent vacation. But he still looks at it as his normal retirement routine is his life. And then he went on vacation for a couple of weeks to visit friends across the U.S. And that was his vacation. So he takes vacations in retirement.
Well, yeah. And again, you can retire but do something else. But the point is you're not doing generally what you've been doing for the last 35, 40 years, which is working and earning the paycheck. So let me ask you a couple of these questions here, Professor Plum, representative of a large sample of people who have asked these same questions of their financial advisor, or these are things that a financial advisor deals with when they've already got the strategy all set. Now we're doing sort of the psychological aspect of it. But even you said even when they have enough money, some are hesitant to spend it. So how do you coach them through that? Kind of just tell us what you would tell somebody else who has the money to spend, but they're just afraid to spend it.
Well, in some cases, you're not going to make the change. They won't change. But as long as we have the ability to provide them with all the income that they say they need, and they keep getting it, and over time, in many cases, sometimes it happens quicker than others, and they see that check can be relied on, that deposit, that withdrawal can be relied on, and that over time, they see their portfolio didn't go down in value. After 5-10 years, I've had people say, you know what, we've been doing this for a while now, and our portfolio is equal to or bigger than what we started with. And I don't exactly know what kind of voodoo you do, but it's working. And wow, this is fun now. And so then they learn that they can, and we can say, you can spend a little more if you want. And they gradually move into it. Some people, like I said before, move into it very quickly. And others, it takes a little while. And every once in a while, I'll run into somebody who just, for whatever reason, will not spend money. I know some people this way. They couldn't spend all of their money no matter how hard they tried.
Yeah.
And they're also worried about making their kids too rich. So they've got a problem that they don't want to make their kids too rich, but they also won't spend any of their own money. It's like, well, then give your money to charity. I mean, what are you going to do with it when you're gone? Because you're not spending it now.
But
we do actually have to talk to people about, go ahead and spend the money. Enjoy it. Take that trip. Spend an extra couple of days, weeks, whatever. Just don't put yourself in the worst seat on the plane. Enjoy it. Go to dinner. Go whatever. But for some people, because of a lifetime of not doing those things, a lifetime of, in their minds, not being able to afford any of the other things, the nicer things maybe, or that, they almost feel guilty spending the money.
Yeah.
And at some point, some people you never get through. We just make sure that they have the income they have whenever they need it. And if they ever do come around and want to spend some money, we make sure they have the money there for that too.
Well, I think part of it is, unless they understand how the strategy works, I think a lot of them say, well, I have X amount of dollars. If I spend more, it's not going to last as long. If I spend less, it could theoretically last a little bit longer. That's kind of the psychology of it. But when you look at the way maybe a bucket strategy, and this is what we use, approaches this, you have certain, like your bucket 1 is independent of bucket 3. In other words, and two, true. But you're spending out of bucket 1. So do you find that an income stream, a cash flow, a predictable cash flow from a guaranteed source helps people to maybe not be as afraid as they normally would because they're really not depleting an account per se?
I mean, it can very much help somebody if you know that you've got a guaranteed income that will never quit. And so basically it changes in character from an asset that I have to manage and pay attention to an income that's going to be there on the same day of the month, every month for as long as I live, maybe as long as my spouse and I live. It can change people's minds. And so there are times when those products, even if you don't necessarily need that extra income, but having it there allows people to psychologically spend some of the money more because it is a guaranteed income source. So adding that protected income, that annuity, I hate to say the word for some people out there, but it is a thing from a psychological standpoint. And this is where protected income annuities really shine. It's from the behavioral finance side, the psychological side, the emotional side of knowing that as long as you got a good company behind you, big, life insurance company, I can spend this money and not worry about it because it's always going to be, don't worry, they'll make more. It keeps coming in.
Yeah. Yeah. And, one of the things that struck me, this really kind of hit me when we were meeting the other day with this group of advisors. One of them said they had a client that they'd bucketized. That's the word we used. And they'd been giving them an income, a cash flow, a predictable cash flow. I think it was probably just about the same amount of cash for 6 years or something like that. And then when it came time to, I guess, refill, they used some of the bucket 2 assets and put that into the bucket 1 so that they could continue for another 6, 7, 8 years. They gave them a raise. It wasn't a huge raise, but it was something. It was sort of an adjustment upward, and
an inflation adjustment.
Well, sure. I mean, it had been 6, 7 years, and it was time for a little bit more. They gave them a raise. Now, he said the person looked at him and said, "I get a raise," and he said, "I honestly, how is that possible? Where is this
money coming from?"
That was the phrase. Where is this money coming from? And it seemed almost like magic. I've been spending for the last 6 years, 7 years, and now I'm going to get more. I want people to understand.
Somebody who doesn't pay attention to where the strategy is working and how it's working and what was expected from it, and they just more or less pay attention to, am I getting my income? It's hard to fathom that taking an income and the portfolio can potentially grow over time, but properly structured, it can work that way. They see they focus on one part of it. Maybe they focus on bucket number 1, the assets in the less volatile, safer area, and they see that being spent down, and what's going to happen? What's going to happen? And then when it gets refilled and they still have more money than they started with, they're like, it does kind of shock people at times. But there's a wide difference in how people look at the overall portfolio. Some people don't look at the portfolio. They don't know what's happening. They don't care. As long as they get their check, they just want to know that they look at the bottom line. What's my portfolio worth, and where's my check? And other people get more into, so what's happening with these investments? How's it working? I'm okay. This portion of the portfolio is up, a couple percent. This portion of the portfolio is down percent. Is that where we expect it? And they want to know the inner workings of it. Not everybody's the same, obviously. Everybody has a different take on it. And they look at it. Some people look at it very closely, and they have a better understanding or a better idea of why it's being happening. Other people just like, hey, as long as I'm getting my income, talk to me once a year about how the kids are doing.
Yeah. And so part of the whole psychology when we talk about using bucket one from guaranteed non-volatile sources, we'll put it that way, where you don't have to worry that you're selling stocks when they're low because there's a bad market right now and you're depleting your bucket. Well, it wouldn't be a bucket at that point, just be your account faster. That's got to be a big hurdle that gets them over that hurdle is I don't have to worry about that. And I think that's one of the reasons that we have that strategy is to help you out from a psychological standpoint. And that's part of learning to be retired. There are other parts of learning to be retired too that don't necessarily have to do with the amount of money or the amount of cash flow that you have. But have you found that even with people who have the steady cash flow and don't mind spending the money, do you ever find that they feel like they don't know what to do with themselves?
Oh yeah, sure. At some point, I think almost any retiree is like, okay, now what? I've got, and they have to find that purpose, and that purpose is different for everybody. And so it's just a matter of where does meaning come from in your life? If you've got all the financial needs covered, now you really have to, you always have to focus on what enriches me from an emotional standpoint. Where do I get value in my life? Where do I add value to others in their life? How do I go about living and making a difference? Some people really want to make a big difference. Some people just want to get through. What is it that's important to you? And that is it's all psychological.
Well, yeah. How often do you find, Rick Plum, that somebody you've been working, I call them a client, that their vision of retirement has changed once they're actually living in it?
Most people change at least to some degree.
It has to be. Yes.
It's rare now. Some people who have been planning for it forever. Retirement has been a goal since they were 25 years old. They are more likely to know a little bit more about, because they've been thinking about it forever. They know what they want. They know it. But for somebody, a lot of times retirement kind of creeps up on us. One day we're 45 and we think, we got another 20 years. And then all of a sudden, hey, I'm 65. I probably should think about retiring. It happened quickly. What does this mean to me? What does retirement mean? Some people, unfortunately, maybe they're in their late 50s, early 60s, and they expect to continue working for another, who knows how long, because they enjoy it. They're having fun with it. And all of a sudden, that employment is no longer there for whatever reason, whether it's their health or other issues or the company, and they can't get another job. And it's like, wow, so retirement came on very sudden-like. What do I do? That's where that becomes more of an emotional challenge in some cases.
Yeah, and how long do you find that it takes people in general? And I know everybody's different, but in general, to make that switch, from the working to the not working, at least not going into work every day, and learning how to maybe spend money that they would otherwise be hesitant to spend?
Well, it's very much who the person is to begin with, and how quickly that retirement happened. For somebody who's been planning on it forever, they probably have more things to do in retirement than they know what to. They don't have the time. It's not an uncommon statement to hear somebody say, "I have no idea where I found time to work. I have so many things going on in retirement. I've got all these projects to do this, that, and the other thing. I don't know where I found time to work before." And others, especially people that it happens more quickly to the retirement, it's like, I need to find something, a purpose to do something. And so they have to, it really is different. And so I don't want to give you, there is no one general answer for this, but for those people, it can take a little while. And in some cases we can, there's some depression that sets in while they figure out who it is they want to be.
Mm-hmm. Yeah, a lot of people have their social life tied up with their work, and they have their self-worth tied up with their work. So, not to get too heavily into that stuff, but it is part of learning how to retire, how to be retired. Now, when we're talking about I mentioned a little bit ago, after 6 or 7 years, this particular person we were mentioning was surprised to get a raise. Now, many retirement plans, strategies, if you want to call them that, decide that you need to have a 4% or 2%, whatever it is, increase in your cash flow every year as an inflation bump. Now, this, which means that they say, okay, well, if you need, pick a number, $50,000 a year to live, let's say at age 65, by the time you're 85, you're going to need to have, I don't even know, $80,000 a year. I don't have the exact number, but it's going to go up every year. And by the time you're, 65, so after 30 years, what do we have? What do we have here?
After 20 years, assuming like a 3% inflation, it'd be 90,000.
Okay, so so 20 years later, so if you need 50,000 when you're 65, you're going to need 90,000 at a 3% cost of living adjustment every single year by the time you're 85. And by the time you're 95, it's got to be even higher than that, probably closer to 100-something thousand.
Closer to 120-ish?
Yeah. Okay. So this is what a lot of these retirement strategies, and I'll put that in quotes, tell people. And they say, well, in order to create that, you're going to need to have $120,000 when you're 95, and we're going to assume you live that long. Boy, you're going to need...
then also say, at 4%, you need $3 million in your account at that point.
Right. Yes. And this is what gets me.
You don't need 4%. You don't live by the 4% rule when you're 95. I'm sorry. You do not have to stick to the 4% supposed rule when you're 95. And it's highly unlikely you're going to need to provide 30 years worth of income from that point forward.
Yes, and this is where this fear of spending, I think, gets some people too, that we talked about a little bit ago. The fear of spending is, well, if I need $50,000 a year, what if I live to be 95? I need $120,000 based on the numbers. And the reality, Professor Plum, if we said at the top of this broadcast, is that you're spending, and we'll take healthcare out of that because I know toward the end of life, healthcare spending as it currently is goes up, but your spending decreases. If you needed $50,000 a year at age 65, you are very unlikely to need the equivalent, which is $120,000 at 95.
Very unlikely. And also, what else is going on in your life? A lot of people that retire today now have mortgages that if they live 20, 30 years, well, that mortgage should be gone by then. And so that's an expense that doesn't continue throughout, that portion of their life. So there's a lot of things going on that change the way we spend. This one study talked about it just in overall general sense. We don't do as many things later in life as we did when we were younger in life. Yes, things tend to cost more. If you were to buy the same amount of goods and services when you're 85 as when you're 65. But you don't. You typically don't travel quite as much. You don't eat as much. You don't shop as much. You don't buy clothes as much. You don't do, good, bad, or indifferent. You don't do as much. And so it's very rare. And sometimes life will throw a curveball to people and their spending does go up. So we do have to make sure we provide for that flexibility. But for most people, especially once they get past 75, it's rare for them to say, yeah, money's getting really tight. We need to increase my distribution to keep up with life.
Yeah.
In more cases than not. Now, I'm not saying it doesn't happen. It does happen from time to time. Usually those are fairly short-term things, though. But more often than not, it's, you know what? I got this money kind of building up in my checking account. A common question is, how much money should I have in my checking account? It's been kind of building up. I got $50,000 in my checking account now. What do I do with it? Yeah. Like, well, unless you're spending $50,000 a month, you probably don't need $50,000 in your checking account. Let's figure out what's what's going on and where we can make things more efficient.
And it's unfortunate that many plans are put together that way, where they have to increase, and you better have $3 million or you'll never be able to retire, even at $50,000 a year at age 65. Because I think people would find that they can get by on not nearly as much in many cases.
I don't like the word "get by" because to me the term "get by" means that I'm purposely keeping my income low because I've got to do this to get by.
True.
No, you just don't need, and you don't want as much cash flow. A lot of times I have clients that are saying, we've got plenty of cash flow and income. We got money stacking up over here in CDs because we don't know what else to do with it. My biggest issue are these dang taxes. How do I get around these taxes? And it's like, well, let's talk about what's going on in life.
Well, and that's another aspect to this we aren't necessarily going to cover today, but we have in many other episodes, which is the taxation part of retirement, which can change for somebody who is retired versus somebody who has been working and maybe contributing to a 401k and doing all that stuff. So, but that is certainly an element of this. In just we don't have a ton of time left in this particular episode, Professor Plum, but I think what I wanted to do was that I wanted to get people to understand that retirement is not just stopping work and everything is going to go exactly according to plan.
No, it's something you need to think about, both on a financial level, but in many cases, almost more importantly, on a personal, emotional level. Mm-hmm. What does retirement mean to you? How do you prepare for it? How do you plan for it? Again, this is both on the financial and emotional side. What does retire? People will ask me, why aren't you retired? You're old. And it's like, well, what else would I do? I'm having fun with what I'm doing. I mean, until it's not fun anymore, I kind of like what I'm doing.
Yeah, and there's nothing wrong with working. And for people who love it, and even if their identity is tied up in it, if they don't want to retire, then there's certainly nothing wrong with that. But sometimes retirement is forced on people, whether it's through a company reorganization or simply you can't do it anymore. You may love what you do, but you just cannot physically.
You cannot continue doing the job. Especially happens in trades where they've made good money, they do well, and they just physically wear out. You know? Or like you said, sometimes reorganizations or changes in the economic environments where jobs are downsized. And I've seen this happen to family members. You're 58, 59, 60 years old, and the job goes away. And then trying to get reemployed at that age is not easy. Yeah. Especially, I mean, I know people that they were working at a certain level. And when they got downsized at age 58, they realized, they got a good backing. They want to keep working, but they don't want the high income that they had before, because they don't want the stress that comes on with the job. Mm-hmm. They want a job. They want to do, they want to work. They want to be around people, but they don't want to have the same level that they had before. So they start applying for positions, at a lower level. Let's just call it that. We've heard about lack of a better, and nobody will hire them because they're overqualified. Yeah. Because nobody's going to hire them because, well, you're going to get bored and leave. We don't want to hire somebody that's going to leave in 6 months. And so they have a hard time getting reemployed and doing what they want in jobs. Mm-hmm. And so they end up either having to take on the things they're trained for, the higher stress jobs that they had before, or they have to retire.
Yeah. And more often than not, I think they probably just say, they retire. And so, to relate this all, as we always do, to a strategy, and specifically to bucket strategy, bucket strategy is about cash flow. This is true. It is about cash flow. And we kind of talked about this last week, what people get wrong about it. But it's not just about cash flow. That's certainly a big part of it. But there's so many other elements to it. And you can even put the psychological elements of it into a bucket strategy by saying, look, bucket one is unaffected by market volatility. When you're spending the money, we're not selling things, so your stock, so that in reverse dollar cost averaging. You've got this set. We know for the next 7 years or so what your income is going to be. I think that takes a lot of the psychological problems.
It takes a lot of the stress from the market and from the investment side out of it. so that they can now focus on the stress of the emotional side of what the heck am I going to do with my life?
Well, that's true. That's true. And what you're going to do with your life is up to you. But that's something you can also talk to your advisor about. And that's why I know, Professor, what
can I afford to do?
Yeah.
A lot of times when somebody wants to keep working, it's not about retirement so much as it is about financial independence. And even though they may not want to quit work today, they may have enough money to quit work today and live the way that they're living now. And so you set the plan up so that if they have that proverbial bad day at work, they can quit and know that they're going to have plenty of cash flow to live. And a lot of times people will have the bad day at work, take this job and you know what, and they'll be retired for 3 or 4 or 5 months and then they'll get another job. They'll find something. And they're doing it because that's their purpose. That's what gives them their value. It's not the money they have. It's what they do that gives them value. And that's important.
It is important.
To feel that you are providing value to yourself and to others is an important issue. But knowing that you've got the financial side of the equation covered, regardless of what the market does, taking the stress of volatility, the stress of the cash flow off the table gives you a lot more options and a lot more time to figure out the other side of the equation that basically has nothing to do with money.
Well, you just said the word right there. I mean, money certainly we know doesn't buy happiness, but it can buy options, and options give you choices, and that gives you a little bit more freedom. And I think freedom and independence is what people want when they retire, and the psychological part of it can work itself out. But that's something you can talk with your advisor about. These are things that the Lucia Capital Group advisors do on a regular basis, all the time. It's not just about the numbers. Yes, the numbers are important. Yes, the structure of the buckets is important. Yes, the tax management is important. So is the asset location and the allocation and all the things that we kind of went over on last week's program. But it's also the psychological side of it, which is what I wanted to cover today. And that's something else that a financial advisor, a good financial advisor, can help you out with. Talk to the folks at Lucia Capital Group. Give them a call, 800-644-1150, 800-644-1150, and talk with them about it. Maybe you're not sure what you want to do, or you don't know how to retire. This is so true of many people. You don't know what to do, not just day to day, but how do I start spending money? How do I get over this fear of spending money? Maybe we need to go over the strategy and explain a little bit more how it works. They're happy to do that. Talk to them again, 800-644-1150. Go online, luciacap.com, LUCIACAP.com. All of these resources are there for you. You can certainly download our Bucket Strategy Guide. It's in the search bar up at the upper right portion of the website. Type in Bucket Strategy. It's the first thing that'll come up. Download that guide. Take a look at it. It's free, of course. And read it. Read it as much as you want, and that'll help explain some of the things that we talk about on this program, especially with regard to spending and bucket number 1, if you need help with that. Or just talk to an advisor at Lucia Capital Group. Don't forget to subscribe to this podcast. Do so. If you haven't done so, please do that because you don't want to miss a single episode. Spotify, Apple Podcasts, those are the 2 places you'll find us here. Managing Your Financial Future. Make sure every episode is downloaded every week to your device so that you can listen to us. And if you have any ideas, something that you would like us to talk about, I don't do this a lot, Professor Plum. Maybe I should ask for, what else do people want to?
What do you want to hear?
Well, and the reason I brought this topic up was because this came up in our meeting a couple of days ago, and I said, hey, you know what? That's something that we don't really discuss this a whole lot. So maybe there's something out there that you folks would like us to talk about. Just let us know. Go to luciacamp.com and shoot us an email. Professor, I thank you so much as always.
You're very welcome.
We will talk next time. For Professor Rick Plum, certified financial planner professional and accredited wealth management advisor, I am your podcast host, Johnny Dean. This is Managing Your Financial Future. Thanks for listening. And, of course, we'll talk to you again next week. The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. Each taxpayer should seek independent advice from a tax professional based on his or her individual circumstances. There's no guarantee that any investment strategy will meet its stated objective. All investments involve risk, including potential loss of principal. These materials are provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. The information in these materials may change at any time and without notice. Examples cited are hypothetical, are for illustrative purposes only, are not guaranteed, and subject to potential federal and state law amendments. There's no guarantee that you will achieve the results discussed or illustrated. An asset allocation strategy does not ensure a profit or protect against loss. 401k benefits may be subject to change at your employer, the governing pension, or benefit organization's discretion. Before investing, carefully consider a variable annuities investment objectives, risks, charges, and expenses. To obtain a prospectus or summary prospectus, which contains this and other information, call your financial advisor. Read the prospectus carefully before investing. Variable annuities with guarantees are available through optional riders at additional cost. CDs are FDIC insured up to $250,000 per deposit or per insured bank for each account ownership category. Rick Plum is a registered representative with and securities and advisory services offered through LPL Financial, a registered investment advisor and member FINRA SIPC. LPL Financial Insurance License Number 0518721. LPLIA Insurance License Number 0B91442.